Well, so in the prior few years, we saw one of the biggest ever liquidity injections into markets in history, and now we're seeing one of the biggest withdrawals of liquidity from markets in history. Right now, so basically we have a declining economic activity, which is generally good for gold compared to stocks, but we also have the Fed trying to tighten into this, which is bad for pretty much anything other than the dollar and maybe some really defensive value types of equities and things like that. And so I think right now the Fed's in a dilemma where they have declining economic activity, but inflation's still well above their target. And so I think the kind of the regime shift would happen if they have to stop tightening due to declining economic activity while inflation's still high.
Economist and macro guru Lyn Alden believes we might soon see a reversal in the Fed's tightening policy, which could bode well for assets like Bitcoin, but not for other assets. In a recent interview, the full-time investor and independent analyst speaks at length about the current economic situation of the United States and how it is affecting or will affect the markets in the coming weeks. U.S. inflation climbed to 8.5% in March 2022, its highest level since 1982. In response, the Federal Reserve vowed to increase its benchmark interest rate for the first time in 4 years. It has also pledged to embark on quantitative tightening policies to reduce its $9 trillion asset portfolio. These measures are pretty big considering that the apex bank has been propping the markets up for the past few years. So the markets will go from getting hundreds of billions of dollars from its biggest investor, the United States government, to getting nothing and having some of the existing liquidity sucked back in all of a sudden. We've seen some of the effects of these measures over the past few weeks. Last month, we saw the S&P index fall below $4,000 for the first time since March 2021. Whether it is bonds, stocks, or cryptocurrencies, the market is basically having a rough time. In her interview, Alden explains some of the current market trends and how everything might soon change if the Fed decides to adjust its policies. Please watch, share, and like this video. You can also drop your comments below and subscribe to the channel for more videos like this. Enjoy.
Well, so in the prior few years, we saw one of the biggest ever liquidity injections into markets in history, and now we're seeing one of the biggest withdrawals of liquidity from markets in history. And so it's unsurprising to hear that there are rather extreme anecdotes happening because we are seeing that show up in some of the numbers. I mean, the valuations that unprofitable tech stocks reached was comparable to the dot-com bubble, and the drawdown that many of them have had since then has also been comparable to the dot-com bubble. And back during the dot-com bubble, it was not like every sector was affected equally, right? I mean, there were a lot of the value sectors. I mean, they might have run into a few years of market turbulence, but they didn't have the extreme, price movements and liquidity movements that you saw in some of the tech names. And we've kind of seen a similar outcome this time, where what you see in tech and venture is like one of the biggest boom busts ever, whereas what we're seeing in many other industries is not nearly that extreme. And I think what's also adding to it is that we have a historic bond drawdown at the same time, whereas in most of these environments you would have seen bonds do pretty well, and so a lot of investors have stocks and bonds and they both went down. And so based on something like a 60-40 portfolio, you actually have a drawdown similar to what you see in 2008, even though stocks in terms of the broad indices have not done nearly as poorly, at least as of this time, as what they did in 2008.
Are there any facets of this crash occurring now that you could honestly say were completely unexpected and would qualify as a black swan?
I mean, you can. So a black swan is pretty much by definition unpredictable, right? And so there are low probability events that occurred. Like, I mean, I think the Russia invasion in Ukraine. I mean, the idea that it would happen right now this year was surprising to many, including myself.
Yeah.
So there's a number. I mean, the timing of the pandemic, a few years ago, things like that are possible to have in your kind of near-term models. And so there have been a number of shocks to the system, but there are always shocks to the system. Some of what we're seeing in this broad drawdown are not black swan events. And so, for example, if you look at the U.S. Purchasing Managers Index, right, the PMI is basically a measure of economic growth acceleration or deceleration. And that doesn't mean growing or shrinking. It means accelerating or decelerating. And of course, if it decelerates enough, it can outright shrink. And if you look at that long-term cycle, roughly every 3 years, you go through one of these gyrations where it looks like a sine wave with like a 3-year period. And, some of those drawdowns result in recessions, other ones result in soft patches. Whenever you have a declining PMI environment, which we've had over the past, 6 to 12 months, you tend to get a lot of these impacts in the system. And then we complicate it by the fact that we had the biggest inflation spike in decades. And so the Fed is tightening into that slowdown. And so a lot of things that are inherently unstable get tested and broken. And what we're seeing in crypto, I mean, it's always hard to say what specifically is going to happen. But for example, the biggest news event there is the complete unwinding of the Terra Luna ecosystem. And there are a number of us, including myself, that actually wrote ahead of time about the risks with that protocol. And so, I didn't say it was going to crash in mid-May. It was like, it's like, if you're worried about forest fires, you can describe, the conditions for a forest fire are looking very problematic, but you can't predict when lightning is going to hit a tree, right? Yeah. And so there are a bunch of people that are outlining there are aspects in the broad crypto space that are completely unsustainable, and that can be separate from your long-term view of something like Bitcoin. But basically around Bitcoin, there's all these other projects, and many of them are, basically they seem like black swans when they happen, but they were artificial to begin with.
While discussing the growing behavior among investors in this macro environment, Alden notes that there has been a massive shift from high-growth stocks to value stocks and commodities. This would suggest that investors are trying to play safe, betting on stocks that have proven themselves instead of those with higher growth potential. She also talks about gold and how it has been performing since last year. Alden explains that gold might not be performing up to investors' expectations currently, but that it has had a better year compared to a lot of risk assets. Please listen to Alden as she talks about a possible shift in the market and how Bitcoin might be impacting the price of gold.
I think to see gold do particularly well, you'd want to see more, right now, so basically we have a declining economic activity, which is generally good for gold compared to stocks. But we also have the Fed trying to tighten into this, which is bad for pretty much anything other than the dollar and maybe some really defensive value types of equities and things like that. And so I think right now the Fed's in a dilemma where they have declining economic activity, but inflation's still well above their target. And so I think the regime shift would happen if they have to stop tightening due to declining economic activity while inflation's still high. I think that's where you could see gold do particularly well. Probably some of these other, Bitcoin probably do pretty well. Whereas anything that still faces margin pressure from rising wages or that faces supply chain problems from, say, China, those things would probably still continue to have some turbulence in that type of environment. Whereas the things that don't have to worry about profit margins, like hard monies, can do pretty well. And then I would say furthermore, I think, obviously one of the challenges to gold has been that it's now sharing the market with things like Bitcoin. And then even the broader, even Bitcoin then had to share that with like Ethereum and had to share it with all these altcoins. And when you have every few years in that cycle, the malinvestment's cleared out, right? So anything like Terra Luna and these other things, they get cleared out. And so, I think if you were to look at gold and Bitcoin together, that's not really been a weak market over the past, any really decent time period, 3-year, 5-year, 10-year. If you have a little bit of both, gold does better in kind of risk off environments. Bitcoin does better in risk on environments. You don't worry about the market share dilution as much. I know that, for example, the folks over at Incrementum, they published the In Gold We Trust report. Yeah. I know they have it's like a fund that rebalances between, say, gold and Bitcoin, right? So they've kind of expanded their view of so I think, if you look at it in that lens, it's not really been that bad of a market for hard monies in general.
According to reports, the U.S. Federal Reserve has planned at least 2 more 0.5% interest rate hikes. One will be announced later this month and the other in July. We recently heard Treasury Secretary Janet Yellen all but admit that they don't really know what they are doing, especially as the Russia-Ukraine war continues to threaten the world's food and energy supply. China's zero-COVID strategies also continue to create more supply chain shocks for global economy. In light of all these crucial factors, what do you think about Lyn Alden's interview? Is there a possibility that the Federal Reserve will be motivated to stop hiking interest rates if the economy slows down a little, easing some of the pressures on the market and helping us avoid a full-blown, brutal recession? Please leave your comments and observations below, and don't forget to hit the like button. Thanks for watching.